Not nearly the technical difficulties this week as we had last week, but here we are again. It is the Biz Coach Show, and I am the executive producer. I am Chris Flowers, and we are here with the founder of My Biz Coaches and the host of the Biz Coach Show. It is Eric Whitmore. Good morning, sir. How you doing, buddy?
Good morning, Chris. Good to see you again.
All right, and then we have Chris Kurnat on. He's actually a return guest. We interviewed him probably close to like 2 years ago. It was pretty close, and then so we're bringing him back in, and just give you a little background on him. He's an undergrad in civil engineering, worked 5 years in construction, building heavy civil infrastructure projects and running costs for them. Spent a year doing taxes and working for a bookkeeper before starting his own firm 3.5 years ago. Now he offers bookkeeping, fractional controller, and fractional CFO services to service-oriented businesses and real estate investors. He is the founder of Kurnat Consulting. What is going on, Chris? Good to see you again, man.
Yeah, good to see you too, Chris. I'm doing well. Thank you guys for having me back on. I'm excited to be a returning guest.
Yes, sir.
Yeah, appreciate that. Like I said, what we were talking about before the show, just only a few select people get to come back. So
True.
I feel very special. I feel very special.
You should.
We don't know if they're avoiding our calls or are we...
Now I feel less special.
You picked up the phone, buddy. Sorry, man.
Yeah.
Awesome. So, Chris, do us a favor. Just give us a quick rundown again how you got from civil engineering into bookkeeping business.
Yeah, it was. I think on paper it doesn't always seem like a smooth transition, but in hindsight, I think it was pretty smooth. I just didn't realize it at the time, but I've always had financial skills. In school and in my first career, they were more tied to doing calculations around engineering. And then, as I got into the construction side of things of civil engineering, it kind of moves more into cost. You become responsible for the costs of all the projects and the work that you run when you're in construction. And so having to take those numbers that are coming from upper management, first of all, capture all the numbers and then translate them to the guys that are out in the field. So it means something. And it's not just, a bunch of guys working on a construction project. It's project costing in a way, cost accounting in a way. I didn't know any of those terms back then. I didn't know how they translate to the small business world now. Yes, I was in construction for 5 years, civil engineering structural from Penn State. That was my undergrad. And didn't know what business I wanted to start, so left the industry, poked my head around a couple different things, did some taxes, worked for a bookkeeper, and that's kind of when the bug bit me of taking those numbers, putting them together for small business owners now instead of the foremen and superintendents out in the field, and making business decisions based off of those numbers. That I think. In hindsight, like I said, it was a smoother transition now that I'm looking back, but I didn't realize that, when I left the field that I would be using a lot of those same skills. There's also entrepreneurial skills in construction that was, my teeth were kind of cut back then. There's team skills that are built. There's visionary, going from a vision and actually building it. It was a great 5 years, but I'm also very glad I'm out of those 5 years. This is much preferred. Everyone should start a business. That's for sure.
Well, I'm not sure that everybody should start a business. We actually joke about that. Chris and I have some background in the military, and there's a belief that everybody should serve in the military at some point.
Yeah,
I'm like,
yeah.
I don't think so. It's
not really.
And certainly not.
We have that department. It's called the Marines. Anybody who doesn't fit in the Army, we're just talking about.
That's right.
I said everyone should start a business. Doesn't mean everyone's going to be successful in the business.
Yeah, exactly.
Life,
it's how well you can
of
handle
happiness.
it's how well you can handle the ups and downs of starting a business. That's the real factor there. So there's as I was putting some notes together, one of the things that resonated with me as a reminder of a topic of conversation for us was what we call the expensive guess, and actually kind of coined that about a year ago, I think it was. The expensive guess is basically the ongoing habits of small business owners to just kind of go with their gut instinct instead of looking at the numbers. And I know you're going to share exactly why most people have a tendency to not look at the numbers because they usually don't have good numbers to look at. But the bigger issue is how to get there, right? To your point, you mentioned getting the data is one thing, right? And getting the data in an effective way is one thing. But then extrapolating from that data, what does it actually mean, right? So share a little bit about how you do that with your clients.
Yeah, so the three terms I love to use are timely, meaningful, and accurate when it comes to financial data. Timely meaning we need to get it in so that we're not looking 6 months or a year in the past like most people are when you're starting out. And by that time, as you know, macroeconomic things change and old data doesn't really help you anymore. So it's got to be timely. It's got to be meaningful. So it has to mean something to you. And how do you make it meaningful is I'll start with some accounting terms and I'll kind of translate it into layman's terms. But it all comes back to designing the chart of accounts. The chart of accounts is the buckets that you put your numbers into, the financial buckets that you put your numbers into: income accounts, COGS accounts, expense accounts, balance sheet accounts. And so basically coming up with ways to divide those transactions into things that tell a story and are useful to the business owner, the tax preparer, the staff. If you're at that size and you're trying to get people bought in and assign cost pools to people. So that design of the chart of accounts and the design of the accounting system, if you will, that's what leads it to being meaningful. And then finally, the third point would be accurate. And so this is where I see a lot of smaller business owners fall short because they might be doing stuff on side spreadsheets. They might be running reports in their CRM that isn't necessarily reconciled or doesn't have a full picture of all the data. And so if it's not accurate, if it's not reconciled, so if we're not building a general ledger and comparing it to another ledger that being a bank statement, a credit card statement, a loan statement, then that data isn't, I can't trust that data. And a lot of CPAs won't trust that data either. The first thing a lot of CPAs do when they come in at the end of the year to check people's books before they do the taxes is they go to the reconcile tab on QuickBooks and say, are these bank accounts and credit cards reconciled, right? And so if it's not good enough for your CPA, it shouldn't be good enough for you to use to make decisions, right? Now, not everything, I'm not going to die on that hill. I'm not just a true accountant through and through. There's a little bit of business owner in me. So not everything has to be reconciled data because there's obviously headaches with regards to timeliness. If you have to wait for things to be reconciled, you got to wait till you're out of the statement period, right? You got to wait a few days before you get it back. So there's going to be some other reports that you're going to have to pull. And there's going to be some other calculations that you have to do. But at the end of the day, you definitely want to have reconciled statements. And if you're running any kind of numbers, they need to tie back to the statements that are reconciled so that at least you have that sanity check at the end of the day. I hope that answers your question. I didn't get into the cash versus accrual side of things, but I think that's kind of a good general overview of how I see financial data and how it should be structured.
Yeah, absolutely. And I think that a couple things you touched on that I think are really relevant for business owners to understand. You have your financial data, and I learned the hard way early on 7 years ago when I started my coaching business how many of my business owners really didn't understand their financials. Not just not understanding financial terms, they didn't even understand what their P&Ls meant. They couldn't extrapolate from that what that actually meant to them. And most of them, unfortunately, actually make most of their decisions based on the cash that's in the bank account, right? They're not projecting. They don't understand, to your point, cash flow statements, which I actually would like to talk a little bit about. I think that's a good topic. Understanding the difference between the cash flow and what a P&L actually registers or records, I guess, for lack of a better term. But I think that the big thing is that you mentioned the reconciliation process of the different accounts. What we focus on specifically at MyBiz Coaches is helping people identify not so much the P&Ls, although that's absolutely important, as you know, but we help them identify what are the KPIs that lead into the financials, right? So because it's closer to their vernacular what they use in their day-to-day business. So if I'm working with an online business, what are your conversion rates? What's your CAC? What's your cost acquisition? Those types of things. If I'm working with somebody who's financial planner, insurance person, right? So they've got some conversion rates and things like that with the number of people they talk to. Then you have the lifetime value of the customer. Then you have, what's the average revenue per client, and you kind of add those numbers up, and now we can quickly identify if you had X number of transactions this month, and the average transaction amount or revenue dollar amount is X. We multiply those two together. Now we know that you brought in $10,000 this month. Out of that $10,000, right, you have $2,000 in expenses. We can quickly, high level, identify that you're in the green or you're in the red, right? And half the battle is getting past all the minutia of the other numbers. It's like, let's just draw a line in the sand and figure out what that is, and then it makes it easier for you, for my average clients anyway, to kind of look at that and say, okay, I get it, right? And honestly, it doesn't matter if they do 100,000 a year, if they're doing, I would say upwards of a half to even $750,000. They're still struggling with what all of that information means. And until they start working with somebody like yourself, what I often find is they can't draw back from the P&Ls or the balance sheets or any of those reports. Generally speaking, they can't pull back from that and kind of identify what's the information I need to be looking at to make decisions on my business.
Yeah, you touched on basically everything else that is a downline from the P&L that are important to making decisions. Lifetime value being what is the total amount of revenue that we're going to get from clients, right? And you can use that on a case by case basis based on what kind of clients you're discussing or what kind of business you're in, or you could look at past data and try to come up with a calculation of what your history is. You could project that out, right? So there's so much. It's as much. It starts as a science, but I think it ends as more of an art form and more storytelling. And there needs to be both, because you can't just be telling these great stories. You were talking there, and in the middle of it, I had this thought that I have a lot of business owners that are very good at that stuff, but they live in la la land a little bit. And so they say, they estimate their close rate, especially the salesy business owners, like they're very optimistic. That's what it takes to be a business owner. You have to be optimistic. You have to see value everywhere. But sometimes where that bites you is, oh, we take this many sales calls, we close this rate, and and then I look at the numbers and go, oh, that's all well and good, but if what you're telling me is true, then you should have had 5 times revenue that you had last month. So where's the disconnect there, right? Like, we need to actually go a little bit more scientific, because I think you're a little bit more in la la land. But to your point, yes, it's very, very important to understand all those financial terms and then how they bake into the financial statements, so that it's basically just like a start of the discussion. You have the financial statements up, and then you kind of go off into these different directions, talking about different things that the business needs. And as you know, with what you do, you're constantly just trying to figure out, there's usually 2, 3, 4 things, not many things, that you just go, right when you see it, you're like, that's what needs to happen. They just need to be selling more, or they need to be closing better, or they need to be they're not charging enough money, or they need to be managing their team better, or they need to be paying their team more because they don't have the right person, right? All these little nuanced things, that's usually what unlocks from that range you're talking about, that 200,000 to $1 million. You keep on bumping your head into the ceiling until you kind of really dive into the financial data and see those little tweaks that you can make to get to the next level.
Agreed. And I think that you actually touched on it. There's a number of things that are going to challenge a business from their growth perspective and what keeps them from scaling. And I talk about that in my book, the CEO's Playbook for Scale. But those 7 core competencies that we reference, and finance is one of the big ones. And I know I probably used this on our last show as well, but the big statistic that I always pull out when I remind people, I'm like, 82% of business owners who have failed, they acknowledge that financial acumen, or understanding the financial numbers, or more specifically, cash flow shortage, was the number one or primary reason why they had to shut down the business. So when you're talking 8 out of 10 businesses are struggling because of financial issues, that says a lot, right? And it's not just because sales weren't where they needed to be. It could be that they were spending money that they weren't actually making, because they weren't accounting for certain things on the back end. But so let's talk about that as it relates to cash flow specifically, right? Because that's a big misunderstanding, I think, with a lot of business owners. They look at a P&L and they say, I made $100,000 in profit this year, and they can't account for a single penny of that $100,000 in profit, and they're just happy that they actually got a salary out of the business, right? So let's talk through that. What are some of the things that kind of contribute to that?
Yeah, so I'll go through some of the pitfalls of that disconnection. I see it all day long. The disconnection between profit and cash flow. And so there's a million things flying through my mind. The first two that are just obvious are if you have substantial assets on the balance sheet and the interest portion of that expense is going on the P&L. And so what that means for somebody who doesn't understand accounting, just zooming out 1 second, every transaction in a business is either goes on the P&L, on the balance sheet, or both. And in this case, paying down loans of assets is one of those funky ones that it's both. And people, that doesn't really jive with people's minds. They're like, what the heck? What do you mean? How can it be both? It's either, my P&L, or I've got cash in the bank, or I have, accounts receivable, accounts payable, right? So for loans, you need the amortization schedule. You need to break out the interest portion versus the loan payment. It is just the way that loans are structured. And it's the rules around what you get to take as an expense. You do not get to take the entire payment as an expense, just the interest portion as an expense, because that principal amount is building an asset on your balance sheet. So it's not that it's not adding value to the business. It is adding value to the business, but it's adding it by way of an asset, and the interest is what is staying on the P&L. So what does that mean in practice, right? Well, you could see at the bottom, maybe your net income is $100,000. But if you have a couple of loans and $10,000 of interest expense, but you had $30,000 of principal pay down, that money left your bank account, but it didn't flow through the P&L. So you need to understand how much fixed loan payments do we have every single month, because that's eating into my net income at the bottom of my P&L. So that's the classic example of one. So I wanted to start there, just with some low-hanging fruit.
That's a good one too. Yeah, absolutely.
You have anything to add on to that, or before I move to the next one?
No. That's like I people all the time look at that and they're like, they can't wrap their head around that. To your point, that was a good example.
Yeah, I think it requires understanding basic accounting. I'm a big believer when you own a business, you don't have to be a pro at everything, but you got to be a little dangerous at just about everything. Me personally, I'm not a salesperson. I'll be the first to admit, I'm an engineer. I was in construction. Not a salesperson at all. But I realized the first few years, I need to at least be a pretty good salesperson. I don't have to be the best salesperson, but I got to get myself to a certain level. So I apply that example for other people. And this is why people run into issues, is because accounting is not as natural, I think, as getting good at sales. Getting good at accounting requires you to be surrounding yourself with people who speak the language of accounting, and you need to be hearing them talk about it. So you need to become at least a little dangerous to understand, just bare minimum. You just have to be able to read financial statements. You don't have to be able to put them together, but you got to be able to read the balance sheet, the P&L, understand the difference between the two, understand the accounting equation, assets equals liabilities plus owner's equity. And if you're looking in that every single month, it's going to really help you slowly over time learn the language of accounting, and then get to that point where you can actually be dangerous with the financial statements. But yeah, sorry to go on a little tangent there. The next one I wanted to talk about was owner's salary. So adding back your owner's salary to understand the difference between your benefit to the business and just how the business is performing. So we're talking about cash flow here, right? There's a couple of different ways that cash flows that I kind of envision it in my head. We've got your personal finances, and so how much benefit you're getting from the business, and then you've got the business finances. And so when you're reading the business's finances and you see a line that has salaries on there, I always do this with my clients. You have to split out owner salary versus other salaries, because whoever's reading the statements, and it's usually the business owner, they're not going to know what the heck is going on if they don't see how much they're getting from the business. So, and we talked about this before, and with regards to add backs for business valuations, mergers and acquisitions, it's also very important there, right? Bigger firms want to see how much, because they're going to plug somebody in there. They want to see, if I pay a $120,000 person, the owner's making 80K right now. Well, I need to pay somebody 120 to keep this business running. So that's going to eat into my bottom lines, right? So it also helps them as well. But for business owners, they should be incentivized to do it just for themselves, because they need to know, how much am I bringing home each month? How much do I spend in my personal life? And then that is going to help, back to kind of all the way back around to cash flow, is that's going to help them understand why they might be feeling a pinch. Maybe their salary is too high. Maybe I've even seen clients, they have their salary set up, but they also had an auto transfer set up. And so the salary portion is coming out on the P&L, but the auto transfer is going onto the balance sheet as a distribution. And so they're racking their brain. Why is my cash flow all busted up? Well, we're throwing money out through a salary, through a distribution, right? So that's another way I see cash flow disrupted, is through the understanding of the owner's salary.
Yeah, that's a great point. That's actually a really good example as well. Well done, because that's that's an example, to your point, when you're looking at the owner's salary. I think a lot of times, I literally go back to the clients that I've engaged with, and they're like, "Well, I'm only making 80 grand a year." I'm like, "Okay, hold on here. You may only be taking $80,000 salary." I said, "But you have a car payment that the company's paying for. You have insurance that the company's paying for. Oh, by the way, your health benefits are paid for by the company, right? You have the life insurance policies being paid for by the company." That goes back to your point about the what we call seller's discretionary earnings, right? Or for the add back for the valuation. But it's like, I have to remind them, I'm like, you may only be taking $80,000 salary. Oh, by the way, and there's another 15% to throw on top of that 80,000 that you're paying in taxes, right? So it's a hard cost to the business, right? So you got your $80,000 salary, which is more like what, pretty close to 100,000, maybe a little less than that, for any, with what they're paying in on top of it. And if they have a retirement fund on top of that, then you got.
I was going to say that.
Yeah, and so then you got your company car, you got your insurance, you got whatever other things, plus you probably have some membership associations and things like that you're paying
home
for.
Office deduction as well.
Yeah. So now all of a sudden you're like, well, wait a minute, no, you're actually making closer to 120 grand. It's just coming out differently than what you see it as opposed to when you were maybe employed and you were making the same 120,000. It's completely different, and I think that's a big piece that a lot of people can't really kind of wrap their head around that either. And then,
yes.
The other, I just got to say this: the owners that run this as a sole prop, I'm like, I don't know a sole prop that's actually probably managing their finances the way they should be, because it's just too easy to just pull out the money, as they need it, when they want it, whatever, and then not tracking that adequately and really kind of all the pieces that go into that.
Real quick before we move on, there's something I just am working on implementing into my firm this year, because of that point right there, is I am now, it doesn't matter if they're S Corp. So real quick, zooming out, S Corp need to have a balance sheet on the tax return. So usually that is when people are finding me, when they go, oh crap, social media told me I can save 7K in taxes, but I didn't realize I need clean books. So that's usually when they're hiring me. And so E's all well and good. We have distributions set aside as different on the balance sheet as our salary. However, to your point, I'm standardizing this across all my clients, not just my S Corp clients, my sole prop clients as well, my partnership clients. I am separating out current year distributions from prior year distributions. Not only does it help the tax preparers and the CPAs when they're doing cost basis calculations, but when those clients come to me and go, why do I have no money? I swear, every other time I run a balance sheet and I go, you pulled out 60K in distributions this year. And it's very easy, right? You just run a quick balance sheet. It shows the difference between this year's distributions, prior year distributions. And then at the end of the year, we just roll this year's into prior, and then we start that account again. And so I think that's anybody who's doing their own books, that's a free little nugget for you. You can just add that in. It's very easy to add. Just, add an extra account in the balance sheet, reclassify the transactions. And it tells just such a better story of where the money is going in the business. And it gets around that little sole prop thing that you're talking about, which is like, they don't know where the money is going. But also at the same time, how many sole proprietors are at that level where they have the financial statement set up like that? Probably not that many. But it is a potential tool that they could use to kind of understand that a little bit better.
Yeah, it's a great point. Thank you for adding that. Um, yeah, it's just as a side note. I might have mentioned this in our last conversation, getting prepared for this the show. I have a client that I've been with for 4 years, working with for 4 years, and first conversation, we don't get into their financials. I'm not part of the financial conversations per se, other than from a revenue generating or whatever. But one of the things I did for them early on was introduce a strategy of actually collecting auto payments. It's a law firm, and they take retainers and then they take payments from the client over a period of time. So they take an upfront retainer and then. So the irony is that what they do, the particular law that they practice is immigration, and they're like, yeah, our clients aren't sophisticated enough to be able to, just set up an auto payment strategy. And I'm like, if they have a Facebook account, they can set up an auto payment. It's not that difficult. And so they challenged me, and for months we kind of went back and forth on it. Finally, they conceded and they went ahead and introduced it. About 9 months later, the owner comes to me and goes, "Man, that was the best thing we could have ever done."
Yeah.
Collections are way down. Like the revenue is so much higher. And they can actually go back and look at the numbers. So ironically, over those 4 years, we've been having multiple conversations, and I kept saying to him, I said, I don't practice accounting. I've got a background in it, but I don't practice it. But I'm going to tell you, I think you need a new accountant. And for years, he'd done all the bookkeeping in-house. He'd had people doing the bookkeeping. I'm like, I don't even know that your bookkeeping's all that clean either. My bet is that the accountant's just dealing with what he gets. So if the books aren't solid, right? So he switched bookkeepers 2 years ago. And that started elevating some of the concerns as it relates to accounting. And then I mentioned, they called me up with a major issue. They didn't submit their annual statement for their retirement funds that they're required to do. I think it's the balance, like the owner only can have so much percentage versus what the other contributors are. Anyway, the form didn't get submitted, and the payroll company that they used didn't do it. All of this to say, I'm a business coach. This isn't necessarily my primary focus. I just happen to know a little bit about everything, as you mentioned earlier. And so as it all plays out, I'm like, I really think you need to interview a new accountant. And because the accountant should have caught that. Even if it was the payroll company, the accountant should still ask the question. And so consequently, as it plays out, he has interviews that finally this year, at the beginning of the year, after taxes are done, and he paid a crap ton in taxes, not both personally as well as on the business. He goes and has a new accounting company come in, take a look at it, and they look at it, and there's like a $400,000 disparity.
Whoa. What was it caused by?
I don't have all the details, but basically what happened was he was basically the company shows that they paid him personally $400,000 more than they actually paid him.
Gotcha. So probably some kind of double recorded nonsense hitting an account that wasn't reconciled.
Yep.
Yeah.
Yep. And this is where you have too many hands in the pot and too many people. And of course, he manages his own finances, right? He has also got an operations manager that writes checks out of the accounts. I mean, how many different people are in the hands? Or is this just like, well, is all the bookkeeping being done correctly? And then the bookkeeper, I can't blame her entirely because she's independent, right? She's an independent bookkeeper on the side. And she's constantly trying to get the owner or the operations manager or the accountant to clarify the details, right? So anyway, I share that story because I think there's a lot more. I use that example specifically because it's a big number and it scares people. It makes them pucker up. And honestly, you might do that for $30,000 or $40,000 every year in your business, and you don't know it because you don't know what you're not asking for.
Yeah, exactly. Yeah, that's the tough part. I mean, about like charging, how to understanding what my fee is and how do I charge a particular client. Because to your point, I might, save a client 10 times what my fee is. But you don't know that until you get into it. And then, so obviously I'm way undercharging if I'm saving somebody 10 times how much I'm worth. Or I might get involved and everything was kind of clean. And it really, at the end of the day, it's still just like buying back that time from the business owner or somebody on their team that they can go out there and sell and get more revenue. And that usually reconciles just that. But it's such a wide range of like different situations of how much value can be brought. And then I also wanted to touch on segregation of duties. Since we last talked, I have my CMA, Certified Management Accountant. So I gotta bring a little bit of that into the conversation here. I didn't waste all those hours of studying for nothing. Segregation of duties, as you know, as you scale the company, It's one of those silent things that nobody's going to talk to you about until you hit into one of these situations. And what it is basically the person who has the ability to write the checks is different than the person who is reconciling the account, who is different than the person that is collecting the funds or is at the register or is at the point of sale system. And it's not a perfect, okay, everyone has to be different, because obviously when you're starting a business, you can't afford to have all those people be different. A lot of times the business owner is the one that's doing all those things in the beginning, right? But as your risk increases, right, and risk increases with how much cash is flowing and how many people's hands are touching it, to your point, you need to be able to set up controls within QuickBooks, within your CRMs, within whatever systems you have that's moving and affecting money, so that different folks have different duties, and so that there's a system of checks and balances within the financial structures of the business. And so I do some consulting for some businesses that are in that range, that $5 to $10 million range. And a lot of times we're having those conversations about like what their different team members are doing, who's a cost accountant versus a tax accountant, who's touching what, who has access to different things. I mean, it even leaks into cybersecurity and IT and MFAs and the ability to, pull back, access to different things. So I think a lot of times why people don't spend a lot of time doing it, because it's one of those things that like it takes so much time and effort to set up, and you don't really see the value until you get yourself one of these situations where it costs you $400,000. And I'm sure they thought a little bit about segregation of duties after that one. that one I'm sure woke them up a little bit.
Well, and then I could tell you at least a half a dozen stories of people that I know, business owners that I've worked with just in the last 7 years, who have lost literally tens of thousands, and in multiple cases, hundreds of thousands of dollars from internal theft for that exact reason, right?
Yep.
Because they don't have people. They trusted one person, and then that person was, pilfering off. You're like, you're only paying me $70,000 a year. I'm worth $90,000. I'm going to figure out where I get my money from. And I tell people all the time, I'm like, I managed salespeople for 25 years. I've heard every reason why a salesperson believes that they could get that, why they deserved to do whatever they did to either cheat the compensation structure or to create, scenarios, or to steal or whatever it was. I can hear all the justification from every one of them. And salespeople are super creative, to be fair. Whereas, operations people, they're just like, hey, nobody was looking, so what the heck,
Right. It wasn't in the SOP to check, right? Yeah.
Exactly. So, and I say that because I truly value your experience, your knowledge, your insight, and what you do. Both as yourself personally, but also as a category of resources for an owner, right? And it's so important for people to understand. It didn't seem like that big of a deal at the time until it is, right? And then you're like, really wish I had that $300,000, that $400,000, that even $50,000 back.
Sure. Yep. Yeah, it's a tough one. Comes with business ownership, right? But everyone should start a business, though, right? With going back to the beginning, yeah, everyone can handle that, right?
Well, yeah, and I say that in most of those cases, those owners are still in business, and thankfully their business was in a good enough position to absorb that loss.
Yeah.
Because I can tell you there's some owners that I work with that if they had to deal with that, they'd be out of business.
Yeah, they're smoked. Yeah, a lot of business owners would have been smoked by that. Yeah. And real quick, I didn't respond to your auto pay suggestion. So if we could talk about that, setting up the monthly recurring, I think that's great. Obviously, MRR is the hot, sexy thing right now. MRR being monthly recurring revenue.
Right.
And it is a very simple kind of adjustment it's not the right thing for all businesses. I'll say that first. But if you can work it into your engagement letter, clearly communicate it to the client, have a system set up to capture how much is billing, and then show the invoice that is happening on a monthly basis, setting up auto pay and having an ACH authorization form in the beginning that ties to the engagement letter. So that everyone is on the same page, and having a clear, also you want to bake into that a clear runway and window of what it takes to cancel that engagement, right? So you don't feel like you're trapping them in this MRR trap. But it's very generous. I like to, from an ethical standpoint, if I'm setting up MRR, if we're looking at setting up MRR, I like to have it easy for the clients to stop that MRR, right? Because I just think ethically, if you're going to let me draw money on a monthly basis, then I'm going to let you stop me drawing money on a monthly basis, right? So it's not right for every industry, but it's a case by case thing. And for the ones that it makes sense on, it is a game changer. To your point, if you can reduce, first of all, if you're on accrual books and if you're looking at an AR aging summary on a monthly basis, I've seen AR aging summaries go to 25% of the amount that they had before, just because of the changing in the collection policy. And so that's another one of those soft things that, unless you have clean books and you're looking at things, looking at your industry, how much sits in accounts receivable for this industry at this level, right? Am I being crappy at collections? Do I either need to hire somebody to do this, or do I need to change my billing policy so that I can get money in the door faster? Because you don't want to be footing the bill and be losing that game of accounts receivable and accounts payable. You don't want to turn into a bank in that respect. There's other ways to turn into a bank as a business that are good. You don't want to be a bank financing, different projects for your clients. So I just wanted to kind of add my thoughts on that subject.
No,
There.
that's a great point. I'm glad you mentioned that, because my very first client was a lighting wholesale company, and they financed purchases with their clients internally, and their guidelines around financing were so loose. And I'm like, we need to, it's like they got mad at me because I'm like, you need to invest in a credit solution that actually helps determine whether or not they're credit worthy and how much you should be extending to them. And they were like, well, if we get, 20% down or something like that, I'm like, you get 20% down, you're still 30%, you still have 30% risk just covering your costs, let alone. And I'm like, without doing some due diligence on this. So anyway, there was a whole process to that. But the other point that you referenced as it relates to building in that system and identifying what makes sense for a client. There's a lot of it's like, oh, I'm just going to build. I mean, I do that in coaching, right? It was like, oh, we're going to set you up, and then you're going to pay, a few $100s or $1,000, $1,500 a month, whatever it might be for the different clients that I work with, and what program you signed up for. But to your point, the recurring revenue model is so valuable from projection.
Yes.
I can look and see that 6 months from now, I can see the progressive increase as I add more sales into the mix. And I can see that, 6 months from now, my MMR is now at, to your point, $15,000, $20,000 a month. And, I was at 6 months ago. Right. And that shows that progression of growth that I can actually kind of begin to rely on and leverage as I grow and scale, which is another big factor.
Yeah, and the banks love it too, right? They love that, being able to see that, this is how much we have as we're going over time. Chris is loving that down there. One other thing I want to add to that, it's almost like, and this is kind of the first time I've had this thought, but I talk a lot about fixed costs and variable costs, right? Our fixed costs are, this is what we have every single month. Doesn't matter how many clients we serve, this is what we're paying every single month. Variable costs change based on volume, right? How many clients we're serving is how much variable costs we have. You should almost be thinking of it like fixed revenue and variable revenue, right? MRR is basically the fixed revenue portion of things. And then maybe cleanups, consulting, I definitely, on my financial statements, I break revenue into the fixed components and the variable components, because to your point, when you're doing projections, it helps. And then also, just from a, kind of going back to the cash flow discussion, if you have $10,000 of fixed costs and you only have $5,000 of fixed revenue, I would be going, oh crap, like I need to be selling like a madman, or I need to be having 5 salespeople out there. And even if you have that many, you're exposed to much more risk. So I think if you think of it that way, you should always have more fixed revenue than you should have fixed costs, for sure. And it depends on what that magnitude is. I think that magnitude should grow over time as you, as you expose yourself to more risk. Understanding the fixed aspect of your revenue versus the variable in certain industries. Again, this is very industry specific, but yeah, I think it could be super powerful for a lot of business owners.
Yeah, to that point, we look for opportunities to help people identify how we can create a fixed revenue category if they're in even
Yes.
real estate, for instance, right? It's like, how do I find a way to get you a recurring revenue model on this? Maybe that's property management or something like that, if that makes sense for that candidate. But to your point, we're constantly looking at how do we bolster this business up and make that more appealing particularly if you ever decide you want to sell or maybe even get build credit profile to help expand your business or whatever.
Yeah, absolutely.
Awesome. So a couple other things. I want to give you the opportunity to kind of go into this, but I want to discuss real quick before we jump to that. 1099. What's your projection on 1099s? I see so many sales organizations that 15, 20 years ago they were W2. Everybody's W2. And I know the IRS's stance on 1099 versus W2 and how I've lived it my entire career, either through my own businesses or independently. But I'm kind of curious, where do you see that playing out when we have so many more independent contractors, so many more people getting pushed into roles where the owners, the companies don't want to have
Yes.
that cost of maintaining staff. Where do you see that going, and do you see changes in that space in the coming years?
Yeah, it's absolutely a pendulum, and it's absolutely swinging back hard, because I think all the way through my parents' generation, that was just not the thing. I just like wasn't even exposed to that growing up, and now it's like everyone is a 1099 contractor or owns a business or self-employed. It's crazy how much it's swung just in the last 5-10 years.
Yep,
So
exactly.
what does that bring with it? I mean, so many different things. We could spend an hour on a podcast just talking about this, but for my side of things, I see a lot of more solopreneurs and self-employed people that need bookkeeping. They're not these bigger organizations. They don't have a ton of employees. They might have some 1099 contractors themselves, but there is some complexities involved with the 1099 because you got to capture your expenses. The onus is on you to basically run your books like a business to capture all those expenses you're entitled to. There's a ton of opportunity there, but it requires some more work. Similar to, structuring yourself as an S corp. There's a lot of opportunity there, but it requires some more work up front. So I think there's going to be a boom in, the accounting industry for helping folks like that. I could see a firm niching down just and helping those kinds of clients. There's that much out there where you could be like, I don't do big businesses. I don't do e-commerce. I don't do manufacturing. I don't do anything service oriented. I just do solopreneurs, right? Because it's such a avatar of a client that I've seen.
Mm-hmm.
I have a lot of them myself. And so there's that. That's one of the, selfishly, that's one of the trends I'm seeing. There's also a lot of misinformation out there on social media that comes along with this because it's so nuanced based on the industry that you're in. And because everyone's financial background and understanding is different. So, people might interpret it differently. So there's a lot more risk. There's a lot more headache for the IRS to actually, implement this successfully. I wouldn't say it's completely related, but you probably are aware, and your listeners might be aware that the previous limit for the 1099 NEC was $600 last year, and now it jumped up to $2,000 this year, which is a huge jump. And I think that's honestly just trying to help them with the administrative headaches that goes into actually, properly checking 1099s. Because how 1099s are working is that form gets submitted to the IRS. They have how much was paid via 1099s. Basically, what they're doing at tax season, they're just checking your work to see if you actually, submitted what was actually paid to you. And if somebody screwed up, I mean, I've seen instances where, I'm doing the books for my self-employed person, and the 1099 that they receive at the end of the year is completely wrong compared to how much they receive throughout the year. So I check that number for my clients. We reconcile, we split the revenue into the different agencies they receive 1099 income from, and we check the work. A lot of times it's just a timing issue. Maybe their books are on accrual, the clients are on cash. They got paid on 12/30, but it hit their bank account in January. And so we just need to slide, a payment back, or I talk to the CPA, figure out how it wants to do it. But so the IRS side of things, I think is going to be a huge burden on them, and they're going to have to lean into more AI in order to pull off the administrative lift that's going to come with all these self-employed folks and these 1099 contractors. I think I went off to a little bit different direction than you were alluding at, but I think those are all important things. We didn't really even talk about compensation structure. We didn't talk about like what that means for an actual person to receive that. We didn't talk about health insurance and benefits. There's all these other things. Like I said, we could spend an hour on this, but it's a big change, and I've been seeing it a lot just in the past few years.
That's probably a show in and of itself, just talking about the solopreneur from that perspective, to your point. I really think that would be, and it might be a valuable show, because we do get a fair number of smaller business owners that pay attention, listen to the show, and then we have our one of our coaching programs is a entry level, right? I just started, or I am an independent contractor selling insurance, or independent contractor real estate, financial services. I got a lot of those operators that are, maybe 100, 150, 200, 250,000, but they're basically 1099s. They're just 1099 contractors, but don't necessarily understand the nuances of what it takes to actually run that correctly. To your point, manage all the expenses correctly and all that kind of stuff. But I do appreciate where you went with it, because what I wanted to touch on was the IRS component of it. I think what's interesting, to your point, when I was growing up, there were 1099s, but they were few and far between. Now today, like I said, every sales organization that I know of is sending their people to work from home or work remotely, and they're 1099ing them. They don't want the obligation. I can reduce my insurance costs. I can reduce my overhead costs, so I don't have to have a facility for all these people to work from home. It's cheaper for me to buy a $600 computer and ship it to your house and let you work from home. But then you have all these obligations of these other responsibilities that you may or may not understand, to your point. But anyway, I think that's a great topic, and there's a lot that goes with that as well. So the last thing I wanted to kind of dig into, and you kind of just alluded to it, was the whole AI component. So
we haven't even talked about AI yet. How the heck did we get 46 minutes into this podcast and we didn't talk about AI once? This is a miracle, Eric. This is an anomaly for both of us.
Yeah, because I would typically go right there.
Same. Yeah.
So what's your take on things? What you've seen it? I know we talked about it briefly, but I'd love for you to kind of share your perspective on the impact it's going to have in your industry. Because I would argue, I would say that there are a number of people. I mean, I see it right now. I follow Biz by Sell and a number of other outlets where businesses are sold, and I'm telling you, there's accounting firms that are getting sold daily. If it's not daily, it's a couple of week at least, that people are getting out of accounting, right, per se. Now, and it's not necessarily bookkeeping, but they're definitely getting out of that space. That's probably more of an aging out than it is I feel the impact of AI, but I do believe that there's a group of people that are seasoned like myself that are aging out, meaning they're getting ready to retire or move on, and that's why they're looking to sell. But I think there's also I don't want to have to learn AI, so I'm going to get out now while the getting's good, so to speak. So what's your take? How's it impacting your business today, and what do you see in the next 3 to 5 years?
Yeah, so I'm pretty early on in my career, and so I feel more, to your point, I think depending on where you're at in your career, where you want to go, and how long of a runway you have, I think is how much time, energy, and attention you should be spending thinking about it. Because if you're 2 years from retirement, the only reason that I would be really, or selling or merging or whatever, the only reason I'd be spending as much time as I could would be to improve your valuation before you exit, right? Because it definitely does help if you can automate things, for exiting. However, if you're early on, you have this advantage where you didn't build your whole bit, because those people who have been doing it for a while have built their whole business, and now, you can't just kind of layer AI on top of things, right? You really have to kind of build it from scratch with AI in mind. And so I think the earlier on you are in your career and the business's life, the more time you should be spending, and the more of an advantage you have. I actually posted on LinkedIn the other day about this, about how much time I'm spending to automate things, and understand how AI is going to change the workflow of accounting professionals particularly. Mm-hmm. That's what I'm focused on right now. But obviously, as I get further in this and I talk about it a lot with clients, it's going to find its way into all their businesses. So I also spend a lot of time thinking about it applied in service-oriented businesses as well. But for my industry, a lot of the things that pop up for me are cybersecurity and IT concerns, having access to your data, understanding what data can go into these different models, understanding what APIs need to be shared and what shouldn't be shared, understanding how this works into your controls and the different people on your team and what they're using AI for, right? So that's kind of what I'm thinking about it for. Just because I think that's the base layer and that's the ethical way to think things through in somebody's in an industry like mine. And also, I'm not really at that point where I'm automating a ton right now because human in the loop, I think, is still super important. For most people, but I would say especially for my industry and layers, I don't think human in the loop's going to change. I don't think layers of review are going to change, but I think the work is going to become back to all the way call back to the beginning is going to be more timely and it's going to be more accurate. And then the meaningful piece will come down to me. That's basically all I'm going to be working on. It's just like, how do I make this meaningful? And then basically what I'm working on the side is how do I use AI to make it more timely and accurate? And so that's how I think of things. I kind of break it apart in my head and go, I'm using it to do these certain things, but I got to make sure that the end product is elevated. It is not, I don't want it to be deteriorated. I see a lot of times people use AI and what they're telling me or like people are very sensitive to it. So you get shut off by it. If anything client facing is used with AI. So I think it needs to be aggressively implemented into your operations and internal processes. And I think it needs to be very carefully implemented on anything client and customer facing and product oriented.
Agreed. Yeah, I would agree with that 100%. And the piece that I was going to add, and just to give you some perspective, some of the ways that I'm using it as it relates to finance per se with my clients is, for instance, one of my clients got they're using QuickBooks and they have collections and but you pull the report from QuickBooks and it's like, yeah, it's just a list of people that owe money. But how to sort that and manage that would take a lot of time if you throw it into Excel and then start doing it. I can throw it into Excel and I can actually have Claude or whatever take that particular file, and organize it into a really, really useful tool that not only illustrates when it's due, how it's due, who's how far behind they are, all the things that I can do, and I can actually incorporate other components of it to like what their payment history has looked like, just going back and pulling the data from that file. And so within 15 minutes, I built an app that basically probably took me 30 minutes to build the app, 15 minutes to reconcile and get it done. But it was literally I just took the data, popped it in, and now they have a report every month. All they have to do is take the raw data out of QuickBooks, of that Excel file, the collections, drop it into this tool that I created, and it creates this very functional tool that they can use to follow up on collections, identify who they should target first, and who's the highest likelihood to not pay, all that kind of stuff. And
yes.
Huge value return, right, for a few minutes invested. Now it's because I know how to vibe code and I know what I'm looking for and I know how to create something because I've done it before. But that's something as simple as that. I mean, I've probably done a couple of dozen of those now for some of my clients of different tools like that. But to your point, you don't just randomly give it access to your Google Docs with all the files. And you certainly don't tie it into your QuickBooks directly with access to all your bank accounts and all that kind of stuff. So making sure they understand the use case, but there's so much value in that when you talk about making it timely. This is a process that literally it would take them 2 weeks just to pull the data together for somebody to figure out what to do with it. Then to go and execute on it. Now I could do it, and I don't even do it. They just copy paste, and within 5 minutes they've got the report they need.
Yeah, absolutely. But the key to that is that it's a particular, it's applied specifically at a certain pain point instead of broadly. A lot of people, I think, want this just easy button solution that it just does all the work.
Right.
But I think where AI really shines is in the specifics, where you can give it a ton of context, prompt engineer the absolute crap out of it, and it's repeated. So it can learn and improve over time. And so that's another framework to think about it too, is just like what tasks, what projects you could track your time. I think that Alex Ramosi talks about that a lot, about just like getting super aggressive about like tracking your time and understanding what you're spending your time. Do like a week audit of where your time is spent, and then use that as a roadmap to understand, okay, what AI projects can I build? And there's probably a lot of low hanging fruit that are there for people. And I think that exercise has to just be done, unfortunately, like maybe once a month, once a quarter, because AI is moving so fast.
Yeah.
So every time you do that exercise, there's creep into how much AI can help. So I think people just need to, the people who are newer in business have an advantage because they haven't really, their schedule is kind of basic tasks right now. And so they can really design what tasks are done by AI from the ground up instead of just layering it on top of things. But yeah, specific over general for sure when it comes to AI.
Yeah, great point. Yeah, our philosophy is if there's a task that you find yourself doing 2, 3, 4, 5 times, it's time to talk about not just automation, but then let's automate it, and then let's put let's inject some steroids into that by putting AI into it and figure out how we can make it even smarter. Right? The automation is one component. The AI is how to identify the information faster. But it's the key is looking at, to your point, auditing your time and where are you spending a lot of time doing tasks that don't need to be done. And that's not just the owner, that's everybody in that team, right?
That's what I was going to say. I think owners are going to struggle with, I think it's easy for them to do it themselves. They're incentivized to do it themselves. But the employees who are W-2 employees, they're not incentivized to take stuff off their plate, right? Yeah. So we have this weird kind of Mexican standoff where like the employee's like, no, this is how I do things. And the business owner's like, no, show me how you do this. I think I could automate this kind of thing. Right. And in reality, what happens is just that the employees that become more valuable are the ones that like actually care and lean into AI. And so if you don't, work that into your skill set, I'm sure you've heard of all the stories of these big tech companies that like, if you don't have proficiency in AI, then you don't even get to sit down for an interview. And I think that's slowly going to work its way down to small businesses. It might take a little bit longer, just like everything does in small business world. But for me, it's definitely front of mind. And if I have an employee who is, excited by that and lit up by that, then it's just so, to me, there's so much more value there. And so I'm willing to pay them more and mentor them more, bring them up in the company. So I think they just need to have a little bit more of that optimistic mindset instead of no, this is what I was comfortable doing. I've always been doing this. No, let's look at this with a little bit more of innovation, and then I think we can find a path forward to make sure that our company is competitive. Because what you don't want to happen is if you just sit on your hands and keep doing what you've done, we're going to get smoked by another company, and then you're not going to have a job. So, help me help you, in essence, right? Everyone needs to get on board. I think that goes back to like what's the culture of the company and who do you hire and that kind of stuff. But yeah, super important.
Yeah, agreed. And I think that goes back to the question when I started with was, talking specifically about accounting firms, but I think it's relevant to anybody. I've used this statistic many times on the show. 50, as of 2025, 50.3% of all businesses were owned by somebody over the age of 55. When you think about that from that perspective, we also know that generally speaking, over the age of 45 is usually more tech averse. Under the age of 45 is usually fairly quick to pick up on tech. So there's that over 55, you're probably well in that category that you're not necessarily leaning towards technology. And if you're, to your point, a business owner, if you're of that 50% that owns a business and you're not looking at that, my argument to you would be, if you're asking me as a business coach, I'm like, it's probably time for you to look to make a transition sooner rather than later. Because to your point, if my runway is 2 years, totally makes sense. If your runway is 5 years, but you don't want to lean into this, you're going to get crushed.
Yes.
Because 5 years from now, if AI is what it is now, 5 years from now, I can't even begin to project. I mean, I struggle projecting what it's going to look like in 2 years, let alone 5 years.
I think for my industry, I am just assuming that everything done on the computer will be taken care of by AI. And so that's I think the end state for me and for a lot of careers is that anything on a computer will be automated, and anything facing a client, it's just going to be a bunch of us talking to each other at the end of the day. That's what makes us human. That's what makes us unique. That's what we can do and the AI can't. Right now, I'm sure we'll have AI agents that look, I'm sure you've seen some of those videos where it's almost indistinguishable at this point.
Yeah.
But yeah, I'm just assuming, I don't know what that timeline is either, but I'm assuming that eventually everything on computer will be done. And so we're just all going to be meeting with each other at the end of the day. It's going to be one big happy party at the end of the day.
Awesome. Well, Chris, you have anything else you want to share? Any other thoughts or comments you want to bring up?
I think that's it. Yeah, I mean, if anybody is looking to have a discussion about their books or their accounting or how it's set up and has any questions, they can book a call with me and we can do a consultation. I love to, as you can probably tell by this point, podcast, I love to sit down and do this kind of stuff. You do as well. So yeah, I just want to put that out there that I'm, looking to take on clients that are in that kind of like 200,000 to a million range that we talked about. Those are like ideal clients for me. And yeah, I appreciate you having me on. This is a blast. I love to come back every once in a while and you can, there's always new stuff to talk about. So, I appreciate the time. Thank you for the platform and thank you for what you do, Eric. It's really, undervalued. There should be more people doing it in the space. I think it's kind of crazy that there isn't. And so I really appreciate you in this time, this weird time where there's a lot of uncertainty, kind of doing what you can to help out those business owners and help get them through these crazy times.
Well,
no, we talked about that before. Not everybody should be doing what Eric does. So we already talked about that before. Let's get that.
There should be more people, but not everybody should be doing it. Yes.
You all should just go to Eric and get it over.
Right.
Chris, thank you very much. I do appreciate the plug on my own show. That's amazing. But no, also, and I'll absolutely corroborate. Chris is phenomenal at what he does. I've said this before. I would go so far as to say that he impresses me with the depth and understanding and knowledge and insight that he has in the category he's in. I hope that you go on to go deeper into that space that you're in. Because there needs to be more people that care enough about what you do, but more importantly, have the depth and knowledge and understanding and the wisdom that comes with multiple years of doing what you do, because it doesn't exist. As I mentioned earlier, a lot of people are aging out. They're moving on from those fields in the accounting and the bookkeeping and those different categories. And there's a lot of long-term wisdom and knowledge and insight that's getting lost with that.
Yes.
Literally, I mentioned right before the show, I was talking with my daughter. I was a few minutes late starting the show because of that. And she's grilling me, Dad, what should I do? Should I pull the money out of 401k to put down on the second house I want to buy, blah, blah, blah. We're going through the whole conversation. She's like, I even kind of know what I should know because you've grilled it in me, but I just want to, where is there an angle here? Is there another way? Because she knows that's how I'm wired, right? It's like, there's got to be an angle. Let's figure out what the angle is, right? And we went through it. And I'm like, nope, there's really not. You're just kind of stuck in this spot that you're in based on where you're at right now. But my point is, there's not enough people out there that are qualified to have good conversations with our clients that can really help them through that. And I think that you're one of those people I truly would trust to share that to have that conversation and share my clients with you. So I appreciate you being on the show and certainly appreciate your insight and perspective.
That means a lot. Thank you, Eric. I really appreciate it.
Let me tell you, as a former banker, I wish my clients had your books because it would make my life a hell of a lot easier.
Yeah.
With everything, with all the expertise that you have, I'm sitting there like, man, I wish my clients had this dude as an account.
I appreciate that. Yeah, that's you guys put the goalpost for me to try to hit, right? Is like make the books bankable, right? And that's a good place to shoot for.
Absolutely. Well, thanks again, Chris. Appreciate it.
All right. Yeah. Thank you so much, guys.